Hello, everybody. Welcome to Thursday. The S&P 500 was down a grand total of 0.08% today. Actually, a pretty good day altogether, considering how strong yesterday was. Sometimes, we get these huge gains and then basically give them all back the next day. So we held up there, and we did continue to kind of hit this high resistance point right around 4170 on the S&P 500. Have not broken through that yet. So there still should be some concern because we haven't. Just because if you haven't, then could go back down, maybe establish a new low, but some encouragement because we keep hitting it and hit it very hard yesterday with a lot of power. Today, not so much power. And I suspect that the main reason today was so flat and kind of, sideways altogether was really because tomorrow's jobs report is coming out, going to tell us how many jobs were created last month. And this is seen as a really important report just because are the jobs really high and the Federal Reserve has to really go after it with interest rates? That would probably be considered a bad thing, which is ironic again, because sometimes bad news, good news can be bad in this type of market. Or is the job market kind of at expectations or below? So I think the market's just kind of waiting to see what's going to happen tomorrow as far as that goes. So altogether, not a bad day to be hanging on. We are hitting into this resistance. If we break through this and hold up for at least, say, close maybe 2 times above that, we could be in for a nice little run here, but we're not there yet. You can often run into these walls and then fall back down. So, we'll have to wait and see what happens. But I was fairly impressed with today, just that we didn't give much back and the market seemed to be still on the buy side here, still trying to recover as far as that goes. We do have to be careful because you can get some really big bounces in some really big down markets like we had in 2008. So you can't get sucked in too much into these big upturns. Need to see some things happen. Need to see break through this resistance. Need to see us get back over the 200-day moving average. There are several things that would really denote a reversal of change of direction so that the main movement is upward instead of downward, which it has been. And so, we'll check those off as they happen and continue to get, back into the market if those do happen, continue to stay in a more conservative position until we see some of those things happen, just so we don't end up riding back down. In 2008, we had a really big bounce, very much like this, and then it came back down quite heavily. So I just want to make sure we don't end up in a scenario like that if possible. So look forward to talking to you tomorrow. We do have the show tomorrow for Talk Money with Tom on YouTube from 12:15 to 1. Feel free to join me, ask questions, send them in, and I'll be happy to answer those and look forward to seeing you then. Thank you.